makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, lots of headlines this morning on the tech front. Bloomberg understands that Anthropic and Alphabet are in talks on a multi-billion-dollar cloud deal. We discuss that later in the show. And then on markets news, gold steady after plunging on credit concerns, of course, remain. We discuss all of this with Derek Halpenny from MUFG. But first, it's looking like a mixed picture for earnings here in Europe. Bloomberg's managing editor for finance in the MEA, Tom Metcalf, is here with Andrea Felstead, Bloomberg opinion columnist for consumer goods and retail, to look at luxury earnings. So we have luxury and banks. What more do you want for this Wednesday morning? Tom, let's start with, the banks. And actually, Barclays, it's interesting because there's been a lot of credit anxiousness out there, and Barclays was the first one in really coming out and saying their exposure to it.
Yeah, exactly. So it was known they were going to take a hit from Tricolor, and it looks like from the earnings, they don't actually name the entity, but it's 110 million impairment they're taking against a single name client. So that's clearly why we've got Venkat coming on TV going, I'm not happy with what happened there, and they've obviously taken a look, and I think the sort of learnings from that is they're just going to sort of amp up their due diligence, take extra care. I mean, he was pointing out this was a fraud situation, and so that's always a bit more tricky to kind of take too many learnings across the spectrum. But yeah, Barclays, fascinating earnings. Broadly speaking, on the group level, pretty good. Shares are up, and obviously they're bringing forward a share buyback. But then when you drill down, there's sort of these various individual incidents that do give a little bit of a pause. So you've got Tricolor, you've also got this motor finance provision, and then also just generally the investment bank not really blowing the market away. I would say, like kind of coming in under estimates, or in particular on equities, just not delivering.
Tom, it was a good interview with Venkat, so here he is.
We had an exposure to Tricolor. I'm obviously not happy about it. Barclays had no exposure to First Brands, although we were approached multiple times by them. The thing about fraud is you wonder whether it is one bad actor or it is some effect of circumstances that are stretching the company's finances and making them take risks that they otherwise should or would not do. That's the kind of thing we look for, and that's what I think investors should be looking for over the next, months and quarters.
Tom, how is the investment bank at Barclays doing compared to the US, but also other European banks?
Yeah, I think the comparison to Wall Street is where it gets painful. So you look at equities, something like 22% increase over in the US. At Barclays, it was basically flat. And so, Venkat in that interview was also talking about, again, they're looking at how they can boost that performance. There's no suggestion they're not looking to exit that business or anything, but instead they're going to be sort of investing, looking in the long term. And one thing he said is, I think they need deeper kind of client franchise, client relationships. So I think there's a sense that, quarter to quarter, it's always a very volatile space. But, they're there for the long term, and I think you'll probably see Barclays continue to look to find an edge in that space. But, yeah, right now it's tough competition, and it looks like they're losing out a bit to the US firms.
Okay, talk about losing out. You see what I did there, from banks to luxury. I mean, Hermes is actually falling as growth disappoints. Hermes was meant to be the luxury company that could do no wrong.
Exactly. And it's the crucial leather goods division that has disappointed. It's slightly missed earnings. The interesting thing is, Hermes has been very resilient. When times are tough, Hermes is very resilient because it has more demand for its iconic bags that it can actually meet. But the flip side of that is when things get a lot better, it can't produce as much as perhaps the demand is there for. And investors are looking to luxury to rebound. So they've been looking at the names that have been hit more and are perhaps more likely to outperform when times are good.
How are you looking at, so there's Kering tonight. LVMH was actually a little bit better than expected.
Yes, it was.
Is it amongst those three names that will fight it out?
Yes, I mean, with Kering, it's been an underperformer. We will be looking for whether there's been any signs of improvement at Gucci, and also the new CEO, Luca De Meo. He's really hit the ground running, but investors will be looking for what he's got to say about things going forward.
Tom, UniCredit, I mean, it's pretty good, actually.
That's exactly what I thought, and then of course the shares drop a little bit.
Of course.
So, but yeah, no, I mean, I think there's a big expectations around that bank. They've been delivering quarter after quarter, so the shares are up something like 60% this year, so naturally they maybe slide a little bit. But yeah, broadly speaking, looks like they're hitting most of their expectations. I think some analysts were saying, look, when you go under the hood a little bit, there's a little bit less quality in some of that earnings, because I think the NII, the net interest income, was somewhat disappointing. But I think, again, this is very sort of rarefied expectations, so perhaps no surprise the stock's slipping a little bit today.
Derek, we'll get to, of course, your wheelhouse of currencies and yen and sterling in a second. But it does seem the earnings picture is not that easy, actually, to read out, because it's really company, focused.
Yeah, very much. And obviously AI is a huge theme in terms of what's driving overall sentiment. And when you look at the consensus for earnings growth over the next 4 quarters, we're still talking 15 to 20% growth for the MAG 7, much more subdued for the other 493. But, within those expectations, there's certainly nothing priced in terms of a downturn for the economy, a risk-off event, or something that kind of results in a reversal in sentiment. So, we're still priced for
perfection.
Perfect.
So you're worried about a possible correction?
Well, 10-year yields are down 50 basis points at the middle of July, and the equity market, the S&P, is up 7.5%. So we see this big divergence. And as we all know, that's very unlikely to last indefinitely. Yeah. One of those will break. And my feeling is that, based on pricing, the risks, if the labour market, when we start to get the data, if that shows risks of recession, I think that could be a trigger for a reassessment in terms of growth in the US that results in a correction.
Yeah, and we'll talk a little bit more. It's interesting, Adidas is actually down because of the currency swings, and also L'Oreal was a little bit disappointing because of the US. Thank you both, Tom and Andrea. Tom Metcalf, who leads our EMEA finance coverage, Andrea Felsted, Bloomberg columnist for consumer goods and retail. Derek, when you look at, in general, currencies, and it was interesting to have that, actually L'Oreal saying that they are seeing weaker sales in the US, Adidas saying, look, the comparison is not that easy. Are you expecting a lot more volatility in currencies, full stop?
Yeah, incredibly, when you look at FX, we had the really big move through until around May, June. And we had, of course, the biggest drop in the dollar in the first half of the year since 1973. And basically since then, DXY has been in a plus minus 2% trading range around 98. So it's pretty subdued. But, I think, given what's happening in the equity markets, I think that has been a really important catalyst for bringing down volatility more generally. And, of course, inflation overall is moving in the right direction, a bit stickier in different places, but that kind of movement back towards target in terms of inflation is also helping to reduce overall volatility.
We had steady UK inflation actually here in the UK, and that's kind of cemented what the market thinks of a December rate cut. What are you doing with sterling?
Yes, we have a view at the moment, higher euro sterling, and it's based primarily on our view that they will cut rates in December. So I think today's data obviously reinforces our view. Downside hits on all the key components within CPI. I think it's going to be very difficult in those circumstances for the Bank of England to continue to argue that they can, refrain from easing. So November's too soon, but I think December definitely.
And this is despite the labour market possibly getting worse. I mean, it's always this trade-off, right, that we're seeing with the Fed, which is why the governor was so tentative.
Yeah, obviously from a domestically generated inflation perspective in the UK, it's still sticky wages. Yeah. I think the reason why they pulled away from the quarterly pace in terms of the signal they gave is essentially the labour market. The data that we had more recently was suggesting it wasn't as bad as they had originally thought, and therefore they were a bit concerned about domestically generated inflation being stickier. But I think, the miss that we've got now, plus I think, while the labour market might not be weakening as much as they had expected, the direction of travel is still very clear. And by December, when, between November and December meetings, we'll have 2 CPI reports, we'll have 2 labour market reports, and I think that will be enough to justify a cut in December.
Derek, what happens to gold? We're always on gold watch. I don't know what actually, if even cools off the rally a little bit at this point.
I know, it's incredible. One sign of maybe a bubble in an asset is when the narrative about the fundamentals driving the move change. It's geopolitics, it's the debasement trade, it's sovereign risk, and I think it's become a hugely crowded trade. Obviously, we've had a correction. Asia, we've rebounded from the lows in Asia. I would still say, given what's happened in the credit space and the uncertainties that could linger there for a period, the risks are we could see a bigger correction. But, there is a fundamental story that probably has been consistent all the way through, and that is central bank buying. And China has increased its volume of gold by 20% since the beginning of 2024. But if that stops, then that fundamental story loses a key component.
But Derek, is that just because they want to sell U.S. assets? And again, it's unclear to me in the data right now how much it has to do with de-dollarization or actually getting away from U.S. assets in general.
I think it is. I think it's obviously fear of the Trump administration using the financial markets as a weapon for getting what it wants. Now, Russia, that's not the example for Russia, but obviously what's happened with Russia at the beginning of the Ukraine war has kind of perked up central banks around the world in terms of the need for diversification. And I think certainly since the Russia-Ukraine war, there's been a clear trend in terms of an increase in demand from central banks.
Derek, it's exciting. There's a new prime minister, and she's female for the first time.
Yes.
But what does it mean for assets?
And a first female finance minister, Katayama, who's just spoken this morning. I would agree with Finance Minister Katayama, who this morning said the Takaichi trade is probably done. She didn't use those words, but she implied that. And I would agree. Look, there's a degree of policy continuity that I think will be important for the new administration. And while I think fiscal spending will certainly be increased, the details that we have so far, the initial steps are going to be very much focused on getting the cost of living burden on households down. So that's good for bringing inflation lower. And then strategic investments in areas like defense and AI and tech, which, of course, from a Trump-US-Japan relationship is very important. And the last thing the new administration wants when Trump is visiting next week is for dollar yen to be going through the roof. So I think we're certainly done for now. And my feeling is the BOJ is going to be allowed to conduct its policy. It's already been uber cautious in raising rates.
You think it's behind the curve?
Yes, yeah. If you look at the curves, certainly 2s, 30s in JGBs, it's the steepest across G4. And an element of that is certainly investors fearing that they're behind the curve. And we still have inflation. We have inflation data at the end of the week.
So do you think they'll act?
I do, yeah. Obviously, October now is out, but I certainly think December, latest January when we have the updated forecasts. I think by then we have better political stability, and I think we need a rate hike. And it's in the interest of the new administration not to have the yen weakening further. And Katayama implied that today in terms of the damage the yen is doing to household budgets.
Derek, overall, how do you look at the credit concerns that we're talking about with Tom? Do you worry about financial stability, or do we need to start at least thinking about it?
Oh, yeah, absolutely. Private non-bank lending, getting a handle on that, of course, is very difficult. But what we can say is that even with central bank balance sheets shrinking gradually, liquidity is still hugely abundant. And in that context, it's fueling this very strong risk appetite in a backdrop of such high levels of uncertainty.
But do you worry that the Fed is cutting into this cycle?
There is that risk. There is that risk, definitely. But I think the reason why the Fed have started again to cut is definitely, of course, more the labour market than inflation. And if we're going to start getting negative NFP prints, and if you consider the scale of deceleration in jobs growth over the last 3 months of data that we have, it's very unlikely that the labour market is going to recover on its own. Yeah. It either needs fiscal or monetary stimulus for that to happen. And I think in that context, the Fed continue to cut because of the labour market primarily.
Derek, thank you so much. Derek Halpenny, their global markets head of research at MUFG. Now, coming up, AI company Anthropic is said to be in talks with Google over a deal for cloud computer power worth tens of billions of dollars. We'll discuss that next. This is Bloomberg.
it's important to understand that you are building companies that will define technology for the next 30, 50 years. And it is reasonable to approach that from the perspective of you're going to invest money right now to build intellectual property, to build products, to build mind share, to do all those things. And it will take more than 5, 7, 10, or maybe even 20 years to pay that back. It doesn't matter. And that's a completely reasonable approach to investing.
Well, that was Michael Intrator, the CoreWeave chief executive, speaking about investing in AI infrastructure at the Bloomberg Tech London Summit. Now, Bloomberg understands that Anthropic and Alphabet's Google are in early stage talks about a deal for cloud computing services valued in the high tens of billions of dollars. The agreement would mark the latest in a wave of investment deals and partnerships involving AI firms and cloud providers, which, all told, are set to run into the hundreds of billions of dollars. Well, we're now joined by Adrian Cox, a thematic strategist at Deutsche Bank Research, and Matt Bloxham, our senior tech analyst for Bloomberg Intelligence. So thank you both for joining us. Matt, I mean, this feels like a huge deal, right? I mean, could it actually be a game changer for their competitors?
Not so, I don't think so much a game changer for the competitors, but it keeps Anthropic in the game. Exactly, yeah. It's a bit like a game of poker, and you kind of, someone raises the stakes and you have to decide whether you're going to match it or fold. And clearly it's way too early in the game for anybody to fold, and there's enough money out there to keep them funding people. But, I think you have to question at some point how many different AI platforms is the world going to need, and, is this going to be enough to actually kind of close the gap on the two big leaders, obviously OpenAI and Google with Gemini. They're by far and away the kind of most popular AI platforms, both with consumers and businesses.
I mean, I love this. It's really like, they're almost warring, right? So you have Anthropic teaming up with Google, and then you have OpenAI with a new web browser. Is it too soon to say who's going to win this? Is there only one winner?
I don't think there's one winner, but there's probably a small handful. If you look at history, you do clearly get a dominant player in most industries, and certainly tech industry. Amazon dominates kind of online retail. Google dominates search. It's been a bit more spread on social media platforms, but you still got a heavy dominance towards TikTok and Instagram. So I think it is going to consolidate eventually down to a much smaller number of players than we've got today, and the ones that have already kind of lost a bit of pace on the kind of the big leaders are going to maybe struggle, either have to kind of pivot into a niche, or maybe they'll get kind of rolled up into kind of like an aggregate that is big enough and has enough scale to compete with OpenAI and Google.
Matt, what's your take on Netflix? It's getting slammed today, pre-market.
Yeah, I think that was really kind of a sense of market expectations were pretty full. They had a big slate of content. They had the big boxing match, which drew lots of viewers. So I think, although they grew at 17.5%, which is a great number, people were expecting a bit of a surprise on the upside. We didn't get that, so I think just a bit of profit taking.
Yeah. Adrian, when you look at actually ChatGPT, when you look at OpenAI, all of these agreements, it does feel like Europe is being left out.
Yes, to some extent. I think that that is the big challenge, and while you're seeing a lot of interest in sovereign AI and the fact that all of the concern a couple of years ago was about AI safety, and now really it's about national security. And so there is this trope that the US innovates and Europe regulates, and I think that we're kind of seeing that. It was interesting, the comment that you made about companies being sucked up or pivoting on their business models, because that's what you saw with Aleph Alpha, which was a German maker of LLMs, which decided they're going to pack it up and really leaving only Mistral in Europe to be able to compete. But there's more to it than that. Obviously, there's not just the models. There's the data centers, there's the capacity to power them, and so on. I mean,
is that where do you find value? If you look at thematic investment, I mean, there's so much talk. Matt writes about this every day, and it's about the big players because that's the sexy stuff. But if you're going in as an investor, are they too expensive? Do you want to get into maybe some of the smaller ones that will be a winner 4, 5, 6 years from now?
Yes, well, knowing where the winners are 4, 5, 6 years from now is
we'll make you quite rich.
somewhat challenging, one would say. But if you have a look at the structure of the market, it's really like almost like a sort of a tree where you have in the roots there are the infrastructure providers, and then going up into the trunk there are the cloud providers, and then in the branches the model makers, and then up at the top in the leaves that's the applications. And in each level of those, you're seeing various pockets of strength, probably firmest at the moment in the infrastructure. In the end, the value, though, will be in those applications, and probably with just one or two LLMs left really holding the branches up. But most of the applications will fall away along the way.
Adrian, if you look at data centers, is there a worry that there's just going to be overcapacity? I mean, we're talking about like billions and billions of dollars being poured into this. If there's too much money, too many data centers, then it's not a good bet.
Yeah. Well, in a way, what you're asking is the trillion-dollar question. And in a way, there is an interesting bifurcation between people on the AI side, the sort of technology people who are worrying about whether AGI is going to come along, and artificial general intelligence, and then the rest of the world, which is wondering whether there's going to be sufficient demand to justify all of this build-out in data centers. And on the one hand, those data centers, as we saw there from the CEO of CoreWeave, are potentially 20-year investments because they include cooling and buildings and so on, which has a long shelf life. But on the other hand, they're being stuffed with chips which potentially have maybe a 4-year life until they become obsolete. So it's a tricky balance between those two competing timeframes.
Yeah, how do you view this, Matt? Because again, in our stories, I mean, this is extreme. This is the question, really.
Yeah, it is. I think you do have to break it down because at the kind of infrastructure layer, these things are quite modular. So although you may be building a 1 gigawatt facility, that comes on in phases. So there are various kind of staging points where you know whether the demand is coming, where you can decide whether you're going to fit out the infrastructure. That's maybe a little bit more problematic for the power. If you're talking about small nuclear reactors, you can't just turn these things on. They are multi-year investments. So that's probably kind of where some of the risk is in terms of being confident about the future demand, because once you've got that, I think probably inevitably power is going to kind of find a home somewhere. But if you're putting a nuclear facility next to a data center and the data doesn't need it, you've got problems about how you distribute that back into the kind of main grid. So there is a bit of a risk of stranded assets there. And as we were saying, that the applications is probably where, as a venture capitalist or a kind of early stage investor, it's probably a more interesting space to be involved in right now, because applications are becoming agents essentially, and it's that agent space where there's probably going to be a lot of really interesting stuff over the next 2 or 3 years.
So Adrian's timing, basically.
Yes, exactly. It's funny. I did a report recently where I looked back at an old Bloomberg story from 1998 with someone saying in November that year that he said, this is an enormous bubble. This is going to make the bio whatever it was, bubble of early 1990s look like a picnic. But of course, at the time, the NASDAQ was at 2,000 and eventually reached 5,000.
You always go back in history, and it shows you a lot of things that maybe we're missing right now. Adrian, thank you so much. Adrian Cox, Thematic Strategist at Deutsche Bank Research, and Bloomberg's intelligence analyst, Matt Bloxham. Coming up, we'll be joined by Anna Rosenberg from the Amundi Investment Institute. We'll talk geopolitics and trade. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Barclays lifts its guidance and launches a £500 million share buyback, but the chief executive tells Bloomberg he's not happy about its exposure to the collapse of subprime auto lender Tricolor Holdings. Bloomberg understands the AI firm Anthropic and Google are in advanced talks over a cloud computing partnership, potentially worth tens of billions of dollars. Plus, Donald Trump signals uncertainty over a second meeting with Vladimir Putin, saying he does not want a wasted summit. We discuss how Europe is ramping up pressure on Moscow with Ireland's Minister for Defense and EU Affairs. Now, meanwhile, President Trump says a 155% tariff on Chinese goods will begin on November 1st unless the two nations broker a trade deal. Now, it does come, as he says, a meeting with President Xi Jinping would yield a good deal while tempering expectations. We're now joined by Anna Rosenberg, head of geopolitics at Amundi Investment Institute, and Brendan Murray, who coordinates our global trade, supply chain, and geoeconomic statecraft coverage from Bloomberg. So I have to say these are like the two busiest people in London trying to figure out our world. Brendan, what we're trying to understand is actually where the U.S. wants to focus next on trade. So there's been quite a lot of turmoil. What do we know that the Treasury Secretary and the President himself want to focus on?
Yeah, exactly. I think these next 2 weeks are probably the most consequential that we're going to see on trade policy in the second Trump term. We've got the Besant meeting in Malaysia with his Chinese counterpart. They need to de-escalate before they can put some things on the table toward a trade deal. We have the sort of on-again, off-again summit between Trump and Xi. Is it going to happen? We don't know. It sounds like it is, but then Trump says recently it may not as well. So what can a trade deal in the short term look like is a huge question. And then a week after that, we have the Supreme Court hearing on the legality of Trump's reciprocal tariffs, which could throw the whole thing, all the negotiations, the bilateral ones, the deals that are in the works with all sorts of countries. So a lot of the turbulence is behind us, but there's plenty ahead of us as well.
So, and I mean, the million-dollar question that we've been asking since Liberation Day is trade is trade actually changing diplomacy, or is diplomacy changing trade? Like, what do we know the U.S. administration wants?
Well, I think we are in a different geopolitical order, right? And it's not anymore about efficiency, it's about security. And we have seen, as a result, a lot of economic friction. And this is not new. This didn't start with the Trump administration. We've seen more protectionism, more sanctions and export controls. And that already shaped and changed global trade over the last few years, right? And so now we have a lot more economic friction, and more is likely to come. So what we're seeing now is actually an attempt by diplomacy to make up for the disruption of the old world order, if you will. And we're seeing a lot new trade negotiations happening between partners that have strategic interests in common, right? For example, the EU is talking with many different countries and regions on trade, with Mercosur, India, Indonesia. The Indians as well are having a lot of new trade discussions, right? They signed the deal with the UK, and we're having negotiations with the EU, negotiations with Brazil and Mercosur too. Everyone is trying to sign new side deals, if you will, to compensate for the global disruption. And as a result, I think trade is going to continue to flow. We're not deglobalizing, but it's changing how it is flowing.
But to you both, is this going Trump's way? Because the disruption is self-inflicted, but are they happy about it?
Well, I mean, I think Trump's way is to get reciprocity, right? He wants to reduce the trade deficit. That's what he cares about. It's not necessarily going his way. He's getting some better deals overall. But all in all, this comes at a cost, comes at a price to U.S. consumers. And I think we'll see by next year at the ballot box if this is in his interest or not.
How do you see it, Brendan? I mean, I was struck, I know you were at the IMF, I was struck by the IMF Director General saying that trade is like water, that actually even if there's a blockage, it still finds its way to where it needs to be.
Yeah, exactly. But if you look at the amount of trade that the U.S. does with the rest of the world, the three big countries are China, Canada, and Mexico. We don't have a deal with China. We're going to renegotiate USMCA over the next 6 months. And so without any clarity on those three major U.S. trading partners, then the whole trading relationship that the U.S. has really won't change fundamentally. Yes, you can sign some deals with the UK and the EU, and you can kind of change things on the margins, but those are the three that count the most. President Trump would say, look at the stock market. I'm winning. I must be winning. But there are a lot of small businesses that are getting crushed by these tariffs. The number that I saw yesterday from a center-right think tank was $85 billion a year. That's $233 million a day just in the direct tariff costs, not the extra manpower it takes, the extra hours to comply and all that. So it's helping big companies. At least that's the way the market sees it. But it's really crushing the little guy.
Anna, how's Europe doing? Again, Europe has a difficult choice because they suddenly almost realize that they're very reliant on the U.S., maybe not the most reliable ally or partner right now, but they're also very reliant on China. So can they actually be more standalone?
Well, it's tough, isn't it? They are very dependent on the U.S. also for security and for AI, and they're very reliant on China for rare earths and for exports. So they are in the middle. But ultimately, it's a classic middle power, and it can benefit from trying to navigate both relationships and playing each other off. But it's not an easy time, absolutely not. I think what Europe has done more successfully than what we give it credit for is they've become quite successful at managing Trump. And at getting him to align with European interests again, right? And we've seen this very clearly around Ukraine, for example. So I think it's a tough situation to be in. As a result, they're diversifying as much as possible with all these trade deals that I mentioned earlier. But ultimately, they're trying to muddle through.
Yeah, and when you look at Europe, again, is there anything that they can sign on rare earths? Rare earths is coming back. Do we know if the U.S., I mean, it's unclear whether the two presidents meet.
Yeah, exactly. So the rare earths news that China announced just a couple weeks ago, the sort of expansion of their rare earths export controls, really was not just targeted at the U.S., but it sent a message to capitals all over the place, and the Europeans included, who said, okay, well, maybe they do have a bit more leverage than we thought they had, or at least they're willing to use it. And so that has sort of coalesced some of the trade policy thinkers in Brussels to say, you know, we may need to take this a little bit more seriously. Maybe not to the extreme that Donald Trump does, but maybe we need to. We have something in common here that we could work with the Americans on.
I think that the issue around rare earths is that everyone is highly dependent on it, and there have not been enough efforts to try and diversify away from them. This has been well known for a while, but neither the US nor Europe have done a lot, and it will take time. This is not a quick fix. You need new alliances in different types of rare earths, light and heavy, and things like that. So it will be quite a big undertaking to diversify away from that. Right.
And I also want to talk about foreign policy, because actually it's incredible. I mean, we're like 10 days away from that peace deal in Gaza that is now faltering. Yeah. Would the Trump administration see this as a success nonetheless?
I think it's still being seen as a success in the sense that the first part, getting those hostages out, is a big deal, and stopping the big fighting in the first place is something that we have to recognize. But it was always difficult from here, because ultimately the aim to disarm a militant organization, Hamas, is going to be very difficult, because the whole raison d'etre of a militant organization is to be armed, right? And then we have elections in Israel coming up, so there's a lot of risk still there. But ultimately, we have to also keep in mind that the Israeli army is exhausted at this point. Hamas is exhausted. So it remains volatile in a tinderbox, but for now, the first phase, I think, is something that he deserves credit for.
I mean, does it embolden him in trying to find a solution for Ukraine? Again, I mean, this was like a week where there was a lot of diplomacy, shuttle backwards and forwards. He spoke to Vladimir Putin. It's unclear where the president stands on this.
He really wants to find a solution for Ukraine, but he cannot, because it's simply that all the goals do not overlap. Neither the US goals, nor Ukraine's goals, nor Europe's goals, nor Russia's goals, they don't overlap. And ultimately, I think Trump is torn between his personal relationship to Putin, he believes in him, and then American interests, the fact that Russia is an enemy. And he constantly flip-flops as a result of that. But ultimately, it means he will not walk away from Ukraine. He will also not put undue pressure, or let's say very heavy pressure on Russia, economic pressure on Russia. So ultimately, the continuation of the status quo is the most likely, until there's so much economic pressure on Russia that they think now it's time to sit down and find a solution to this. And we're not there yet.
And Europe is not faltering.
Europe is not faltering, because ultimately for Europe, the biggest security and defense for Europe is that Ukraine remains heavily militarized. That's it. They don't really have a choice. So they have to continue supporting Ukraine.
We're just getting some breaking news, actually. A China chip maker, YMTC, said to be mulling an IPO as soon as next year. Now, this is according to people familiar with the matter and what could be one of the biggest listings there in years. But it's also, I believe, a company that was put on a blacklist from the U.S. Is this just going to be a tit for tat in terms of blacklists and for chip makers?
Yeah, exactly. In the same way that the U.S. needs Chinese rare earths, China needs American high technology, and so we're going to see this tug of war continue unless the leaders can get together in a week or so and try to ratchet things down, or at least call a ceasefire. But this is going to go on, indefinitely.
Byrne, do we know what China wants in these negotiations?
China wants, they probably want a lot of things. They want the fentanyl tariffs to go away. It's going to take, some sort of show of force on the enforcement side for China to show President Trump that they're doing something about the illegal flow of fentanyl and its raw materials. China wants a relaxation of those September 29th expanded export controls from the Commerce Department. That really angered them. They don't like the fees on Chinese-made ships. That's going to disrupt the flow of their state-run carriers. So China has some things that's the real question. We know what Trump wants, but China has what many people would say has the stronger hand at the moment, and we'll see. The subject of Taiwan has come up as on the table in these talks. So who knows how the discussion could go there? But China's got a lot of leverage right now, and they could be ready to use it as well.
What a great conversation. Thank you both for joining us. Anna Rosenberg, head of Geopolitics at Amundi Investment Institute, and our very own Brendan Murray. Now, the UK's ambition to become a global leader in life sciences is putting to the test in Cambridge, where rapid development at its biomedical campus is being hit by struggling local infrastructure. Despite major investments from companies like Prologis and the presence of pharma giant AstraZeneca, basic utilities like wastewater treatment are having problems keeping pace. Well, we're joined by Ashley Furlong, who covers health and pharmaceuticals for us. Ashley, can you walk us through exactly what's happening, for example, with the sewage system in Cambridge?
So what we're seeing in Cambridge is that Anglian Water, the company responsible for wastewater in Cambridge, says they just don't have extra capacity. And that's a problem mainly for companies, because homes, for example, Anglian Water has to take that waste, but they don't have to take waste called trade effluent, which is what a pharmaceutical company, for example, or biotech with a laboratory in Cambridge might be producing. So what developers are telling us is that this is a blockage for them. So they're having to find alternative solutions. For example, Prologis has said that they have built massive tanks beneath a new facility. Other developers say that that's not going to be a possibility for them. But it's sort of hindering investment and making it harder to attract tenants in what's already a very difficult environment for life sciences in the UK.
Actually, is this part of a wider problem in the UK?
Yes, very much so. So it's a problem both for life sciences and for the infrastructure question. So maybe just on the infrastructure question, firstly, we're seeing in the UK massive problems with the ability to process wastewater. So you'll know when there's heavy rains, there might be flooding into rivers, which you might see sewage in rivers. In the summer, you might not be able to swim in the sea. There might be sewage in the sea. So that's sort of one issue. But more broadly, what we're seeing is difficulties with UK life sciences and the ability to attract investment. So we're seeing the UK pharma company AstraZeneca say that they are halting a planned expansion of their facility in Cambridge. We're seeing Merck, the US pharma company, pulling out of plans for facility in London. So we're sort of seeing a very much a concern that the UK is just not attractive enough as a place for life sciences companies to invest. And obviously the sewage problem is just making it even more difficult.
Ashley, thanks so much. Ashley Furlong there with a great story that I know will be of much interest to many of our viewers and listeners. Coming up, with Donald Trump saying he does not want a wasted meeting with Putin, we discuss how the EU is looking to ramp up pressure on Moscow. The Irish Minister for Defence and EU Affairs joins us next, live from Brussels, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, European nations are working with Ukraine on a 12-point proposal to end Russia's war along current battle lines. Moscow has so far rejected the idea, despite incurring massive casualties in the war that's now in its fourth year. It comes as President Trump says he does not want to have a wasted meeting with Vladimir Putin, in a sign that a summit between the two leaders may not happen. Let's discuss the European position with Thomas Byrne, the Irish Minister for State for Defence and European Affairs. Minister Byrne, thank you for joining us. Should we actually expect, Minister, EU leaders to agree on the next sanctions package on Russia?
Well, I hope so, because I think it's really important that the European Union continues to use its leverage against Russia and the power and the strength that we have in order to help Ukraine and protect the people of Ukraine, who are basically fighting and defending their European democracy. So we've agreed on numerous sanctions packages. They all require unanimity. Every member state has its own specificities. And I think we will get there, and we've got there so often before.
Will the package include accessing frozen Russian assets?
Look, I think that's very, very important. Clearly, it has specific implications for Belgium, and that's very understandable. So I think what will happen at the leaders' meeting is the leaders will have a good discussion. And from that, then, I would hope to see the Commission coming forward with proposals on this, that we can actually use that leverage that we have in the interests of Ukraine, in the interest of protecting their right as an independent country to survive and exist and prosper.
But, Minister, is there an issue for Ireland as a neutral country, for example, if that money is used to buy weapons for Ukraine?
Look, Ireland's a neutral country in the sense that we're not part of any military alliance, and we have given significant support to Ukraine, whether that's the fact that 2% of our own population is a Ukrainian refugee, but also we've given a huge amount of support in terms of defensive weapons. And we're able to work out a system with the Ukrainian government, with the European Union and with European Union partners to make sure that our specificities, and every country has them, are not affected. And I'm sure that we can work this one through as well. I've no doubt about that, because we've given significant support to Ukraine. They are entitled under international law to defend themselves, and I don't think anybody could object to that.
Minister, where do you think President Trump is on his, relationship or friendship with Vladimir Putin? How problematic would it be for you and European colleagues if a face-to-face meeting were to happen between the two leaders?
I don't think anybody from the European Union has suggested that we would have a problem if President Trump meets President Putin, particularly in the interest of peace. What I think is very, very important is that the European Union continues our strong relationship with the United States. That's at the level of the leadership of the European Union, but also the member states as well. Our own Taoiseach Micheál Martin was one of the first visitors to the White House. We've seen Finnish President Stubb engaging significantly with President Trump and other leaders, including, of course, President Zelensky. So we need to keep up close contact, close relations with the United States. We're, like-minded democracies, we're like-minded peoples. And at the end of the day, I think we achieve much more together. And I think President Trump sees that as well, because we've seen his engagements with the European Union in recent times have been quite positive, quite proactive. Yes, we had the issue with trade, but again, we've sorted that so far. So I think continuing to work closely with the United States is in everybody's interests. And again, I really believe that Ukraine sees that as well, because they have obviously stuck very close to the US despite difficulties in the relationship.
But what do you think would emerge from a one-to-one Trump-Putin meeting?
I don't know, but what I would be suggesting is that, President Putin would be reminded that he's conducting an illegal war of aggression against Ukraine. I think that's the first principle, and that no country has the right to do what he's doing, and that he should stop, and that there should be peace, and that he and Russia should be held accountable for what he's doing. And I think until that happens, we as a European Union must continue to use our strong leverage. I think it's really, really important that Ukraine is allowed to survive as a nation, is allowed ultimately to join the European Union, to make its own choices about defence, and to make sure that its peace and security are protected and guaranteed. I think that ultimately Ukraine has to join the European Union. That's important for them. But I think it's also important for all the rest of us as well. And as European Affairs Minister of Ireland, that's something that I'm particularly close to. And I think that we should keep it as a priority. And certainly for our presidency of the Council of the European Union next year, that will be a significant priority.
Minister, the EU has been affected by China ramping up some of the export curbs on rare earth materials. Would you support retaliatory measures against China?
Look, I think what China has to do is stop this, and China has to comply with the WTO rules. I was at a meeting of the G20 trade ministers only 2 weeks ago in South Africa, and everybody around that table, Ireland is a guest country, but everybody around that table was supporting the WTO in principle. So China should stick to the rules there. I think what Ireland would say is that we have full confidence in Commissioner Maroš Šefčovič. He is one of the busiest commissioners at the moment. There seems to be a trade issue all over the world at the moment, and Commissioner Šefčovič is not only dealing with problems that arise in the case of the US, for example, and China, but also looking for opportunities for the European Union as well in trade. And I think that's really, really important. So the Commission have competence on trade. They will consult with member states. We will support what the Commission does. At the end of the day, China itself depends on a global market for its goods. And I think that they will have to bear that in mind as well in all of this. Trade is always a two-way street. And I don't think that any country benefits from bringing in unilateral measures on trade, especially if there are countries like China that depend on the rest of the world to buy their products.
What do you think Europe needs to now do to be more competitive?
We've a lot to do. I would like to see the simplification agenda move forward. I mean, it has the support of the Commission and the member states. I think the European Parliament, needs to come to the table. It is working on these issues, but we need to work more closely with the Parliament to get some of these administrative burdens reduced that we've committed to doing. I think we have to get that capital markets union, as we call it, the savings and investment union, up and running around the European Union as well, and get some of that investment into the EU, which is at the moment going outside the European Union. I think there's a huge agenda as well on housing. Housing has shot up really, I think, to the leaders' agenda very, very quickly. I know the Cypriot presidency have told me that they will have it as a priority. Ireland will certainly have housing up there next year. And many people around the council table yesterday in Luxembourg at the General Affairs Council, preparing for the leaders' meeting, were talking about the importance of housing. And what we're looking for is a simplification of some of the rules that are there. What we're also looking for as well is a simplification of the state aid rules. We've seen in Ireland a lot of judicial reviews on planning permission, arguing legal points, ultimately coming mostly from European law to prevent developments going ahead. So we've got to make sure the rules are fair and that we work towards the common good. And in my view, housing is very much part of the common good. And we certainly want the European Union to follow on from what, of course, President von der Leyen committed to in her State of the Union. I think the discussion at the leaders' meeting will be very important because housing is a key part of our competitiveness. Our employees, our workers, everybody needs to find a home. Investors, investing in the European Union need to make sure that their employees can find a home as well. So I think it should be a key focus for the time ahead.
Minister, I know Germany floated this idea of a pan-European stock exchange. Is it something that Ireland would support?
Well, we're certainly interested in looking to any proposals that will enhance our competitiveness, enhance our offering as a European Union. We don't jump in on every single proposal straight away. We consider them carefully. But I think we certainly do need more investment within the European Union. There's a huge amount of savings out there, a lot of which goes to America. Some of our greatest entrepreneurs see it as the ultimate sign of success to have success in the United States. We need them to think as well about having huge success within the European Union. We are the biggest single market in the world. We are the most prosperous economy, but we can do a huge amount more. And if we bring some of that investment together within the European Union, I think we can achieve a lot. So look, there's a lot of proposals on the table and we'll certainly consider all of them that come forward that can meet those goals.
Minister, we're almost running out of time, but actually there's a series of things to do with climate issues in the last couple of weeks that have been pushed back, be it the new carbon market or actually, the proposal to give companies another 6 months to comply with curb deforestation laws. Are you worried that the EU is giving up on its climate ambitions?
No, I'm not worried about that because I think the EU is more committed than anybody to achieving our climate ambitions. Why? Because it's absolutely necessary for the survival of the planet. So, we have to take that as the starting premise. We also have to make sure, though, that companies and citizens can work through this because it is a big transition. It is a big change. We've seen in Ireland, and this has been acknowledged by the Commission now, significant energy costs to our consumers and to our businesses as we deal with that transition. So we look forward to proposals coming from the Commission to deal with that, but no, our climate ambition must be top for agenda.
Minister, thank you so much for your time today. Thomas Byrne there, the Irish Minister for Defence and EU Affairs. Up next, Bloomberg Brief. It's a big stock market day. Look, stocks really struggling for direction because we've had quite a lot of mixed earnings. This is Bloomberg.